Well, welcome everybody for the Whitehall owner discussion call today. Thank you for joining. I'm here with Carlin Conklin, principal and co-president of the company, and together we'll present this discussion topic. We are presenting this conversation live to the TIC owners. We're also recording it, and we'll make it available for distribution to all the investors in a few days. We had a Q1 operating call about a month ago at the end of April, and our next general call is the Q2 operating call. That'll be next month at the end of July. But the reason for this call is to give an owner update for a major discussion point of a serious fire that occurred at the property about 3 weeks ago. So it's unfortunate to come together for this challenging issue, but I think as we talk through it, we want this to be informational, and then at the end to allow for questions. And I think there's some nuance here. So we talk about, the damage for the fire and the circumstances there and what the insurance process is that we'll work through. We'll also talk about how this affects our business plan and our operation in the near term, and then also talk about the longer term outlook. And as all these pieces come together, I think we've got a good outcome in mind. We've been through this before, and as housing operators, these are just some of the risks and the challenges that you face, and you do your best to make it through and come out well on the other side. So we'll start by giving a timeline of events and just kind of walk through what happened here at Whitehall recently. About 3 weeks ago, we had a tenant in one of the upper units smoking on the patio, and apparently they didn't extinguish the cigarette. And as the tenant went back inside, minutes later, somebody pounded on the door and says there's a fire or there's some smoke coming out of the roof. And so what had happened is that cigarette caught fire, I think, on the wall of the unit. And then that fire climbed its way up into the attic or the crawl spaces, or pardon me, the attics above the top of the buildings. And it kind of spread horizontally across the roof structure. So what that one cigarette caused ended up to be a huge fire across the top section of a whole block of buildings, and it impacted 30 units. Fortunately, there were no injuries, but as you can imagine, a lot of damage, some of it due to the fire, and then quite a bit due to the fire department soaking it with water. And, sometimes that flooding is the worst damage of all. So this photo that we're looking at here on this first slide, this is actually the building that was impacted by the fire. It's just to the north side of the pool behind the clubhouse. We'll show where this is on a site plan a few slides later, but this is the building that we're talking about here. So this occurred on the 15th. The very next day, we were able to make good progress and speedily have the fire marshal come out. They completed their site inspection. Very quickly, the fire marshal determined that the building was safe and ready for mitigation to begin. A one-day turnaround on, for a fire this scale is pretty impressive timing. And then by the next day, the 17th, the remediation company, Restore Pro, is who we're using here. They'd already cordoned off the building. Mitigation was in place. The buildings were fenced and kind of made secure and safe. All the tenants were moved out, and we also initiated our insurance claim with our property insurance company. So on this slide, you can see the fire department on the scene, some of the fire coming out of the roof of this building, and then an aerial view. This shows some of the roof damage at one of the buildings. If this were expanded to show the whole building, there are also other parts of the roof where the fire came through and actually, exposed the unit, the blue skies above. So as we move on to the next slide, we start talking about the damage and how this claim process starts to work. So with a fire like this, you've got two claims that are going simultaneously. One is the property insurance claim, and that's insurance that you carry to repair the physical asset, to rebuild a building if it's damaged. And so that claim began. And then the other claim that you've got with an income producing property like an apartment building is business income interruption. and that's where the insurer is insuring against the loss of income due or caused by down units. And so that business income interruption claim was also filed, and sometimes it's the same carrier, sometimes it could be different, but this is the same carrier, and we claimed that for all 30 units that had to be impacted due to the fire. Some of these photos here are kind of the most graphic displays of the units that had the roofs burned off above them. Other units in other parts of the buildings on the top floor and other units below weren't damaged so severely, but certainly with the flooding from the fire hoses received damage too. So with the claims in place, then we start talking about the rebuild and start planning out for how that's going to take shape. Fortunately for this property and across our portfolio, we're very, very strict about our renters maintaining renter's insurance, and the current limit that we require is $300,000. This resident was carrying valid renter's insurance. We've already matched our insurer with the residence insurance company and begun a claim through that policy. I guess the nice thing about the residence insurance policy is, although it's not large enough by itself to cover all the damage, it certainly takes a step in that direction. And so for the first part, we've got a $25,000 deductible for our property claim. The $300,000 renter's insurance will pay that, so we won't come out of pocket for that. And whatever this total claim ends up being, the balance of the renter's insurance policy will be applied to that, which will effectively reduce our claim with our insurer a little bit. And that's also a good thing when it comes to like a loss history and the future insurance costs of a property. So that was a positive. Our resident had insurance. That insurance carrier is being cooperative, and they're working that out. The initial estimate for the damage to the building replacement itself is about $1.5 million. Our total policy goes up to about $36 million. So we're well within the range of the coverage that we've got in place. The estimated timeline to rebuild that structure is about a year. What happens here, this building was originally constructed in 1996. In the 20 years or so since then, we've got different kind of code upgrades or different building requirements from that local jurisdiction. So with the insurance policy, the building will be rebuilt, but it will typically be rebuilt to current code. Usually that works in our favor because there could be some more appealing requirements. For example, we had a fire with another property where a building sprinkler system was installed that wasn't there originally. So whatever that case may be, however we rebuild the property, it'll be built to current code. And then I talked earlier a little bit about the business income coverage. That typically runs for 18 months. Our total limit is about $4 million. That will compensate us for the 30 units that are offline. And I think Carlin will talk about this when she's talking kind of our short-term strategy, but these payments end up being kind of lumpy. In other words, the insurer doesn't pay us every month for the lost income on those 30 units, but those payments typically come every 6 months. And so it does present a challenge with kind of flow of funds and timing the income and the expense. But anyway, that money will be ours. And so we should be covered for the rent that we're losing with those units down. So with that introduction to the very unfortunate fire and some of those really sad pictures, I'll pass it over to Carlin, and she'll talk more about strategy and outlook and other things that we're considering from here.
Thank you, Dave. And thank all of you for joining us today. I think we do have quite a few of the ticks, if not all of you, are on the line today. And that demonstrates your concern about the property, you're wanting to know what is going on, and we very much appreciate that sort of involvement. So let's first of all just start with what is the short-term strategy. So, and so it's a little bit of a recap and then a little bit of going forward. So as you are all aware, in April, monthly distributions were suspended due to our need to replenish the reserve balances and manage outlays and reimbursement related to the $150,000 winter storm damage claim. So that is in the past, and that got you to basically today. So this recent fire now, as Dave said, makes the flow of funds a bit challenging to predict in the near term. So although we expect insurance proceeds will cover all rebuild costs and reimburse loss of rents, the payments are going to come in installments and with timing to be determined. So let me tell you what that actually means. So we do have loss of rents, and that is a critical piece of the insurance policy. And particularly with 30 units down, that's a significant amount of income on a monthly basis. So the first loss of rent payment is not going to come until October or November. So we are anticipating 163,000 plus of that first initial payment for the loss of rents, but it's going to be for maybe 5 months out. So that is a significant amount of cash being pulled away because the units are down before we will get that reimbursement. We are going to soften the blow here in what we believe is a very good way. And what we are going to do, we meaning IMG, is we're going to make our line of credit available to bridge funding gaps and smooth the flow of funds through the rebuild and lease up process. So we do have a line of credit. What is the cost of that? Well, it is on, it's a floating rate. At interest only. So when you think about 100 or 200 or 300,000, particularly a floating rate on IO, it's a very, very, very nominal amount given the big picture. So we will be doing the line of credit for that. We will not have any cash calls during this process. And what we have found with our investors is the first question they have in mind is this going to be any cash out of hand? And it is not for the investors. The period of extended indemnity, which is referred to as PEI in insurance policy, covers any additional rent loss during this lease-up period. And as Dave mentioned a moment ago, we have not only the 18 months while we're doing the rebuild, but then we also have some additional when we do the lease-up. We are highly motivated to get this building back online as soon as possible so that we are not pushing up against this 18 months. And a lot of that will be handled by Brandon within our corporate office, making sure that we are responsive everywhere we go in order to ensure that we get this building back online and moving forward as quickly as possible. So that's sort of our strategy, but let's talk about our business plan. Let's do kind of a recap here. And one of you, by the way, after we made the announcement, guys, we've had a fire, we've got some issues here. This particular investor reached back and said, oh, this is such a terrible investment. But why we are here right now is to demonstrate to you with actual empirical data that it is a very, very good investment in a very strong market. So we acquired Whitehall in March of 2020. So we've owned the building just slightly over 3 years. During that period of time, we did have distributions at a 5.65% annualized return. So with our refinance in January, and I'll recall why did we do that? Why did we do that refinance? Well, we did it because we had a rate cap fee due in March, which would have been very, very steep and didn't give us any benefits. And so consequently, a refinance was our best strategy. It provided a 5.8% fixed rate loan, interest only, for the first 3 years of the 5-year term. One of the things that happened in the refinance process is we did have a new appraisal on the property, which was in December of 2022. And the appraisal came in at $53.6 million. And that's about a 30% increase in value from the 41.1 acquisition price. And the appraised value is 9% above the original projections for the year 3 value on the financial model that you all looked at and approved prior to your investment here. To recap in the table, all in, we're at 45 million, but our price at that time was 41.125. That is a price per unit of 163,000. Are all in. So remember, when we purchased this property, we also funded working capital, our CapEx dollars, and fees and all that, and closing costs. And so we're in it for about 179 a door. With our loan, our owner equity at acquisition was 17,760,000. So as of the appraisal in December of this year, the valuation was at 53,550,000. So price per unit of 212 a door. Minus our current loan that we have in place, that puts the owner equity at 26,190,000. So we have a loss of distributions right now, but for the totality of your investment, the value is considerably higher than we even projected it would be at 3 years. So what I would like to do then is just summarize sort of where we are, and then what Dave and I would like to do is open it up for questions that we can provide you additional flavor of what is going on here at Whitehall. We anticipate completion of the project in the third quarter of 2024, so of next year. Construction updates will be provided to all of you as we do the quarterly webcasts. Conservative cash management and the IMG line of credit will prevent owner capital calls to fund reconstruction. With that said, however, distributions will be suspended through 2023. Now, there's a great silver lining here. The new units will support higher rents and increase property value at completion. The yield maintenance prepay and interest-only periods expire in January of 2026. So we will evaluate as we move into 2025 for a property occur most likely in the first quarter of 2026. So at that point, all of the situations relative to this fire claim will be in our past. It's very probable that the rents will increase because of the quality of the new units so that we can maximize our pricing as we enter this period of time in which we want to position the building and we want to go into a sale. So with that, what Dave and I would like to do is open the floor to questions, and you can type them in. I think we're going to move everybody off of mute, and we can have a discussion from there. So Dave, I'm going to turn the mic over to you.
Okay.
Okay, I think we had a little bit of a glitch there. Dave, are you back?
I'm here. Okay. I haven't heard any questions yet.
I don't know what happened. I hope no one's left us yet. We greatly apologize.
I can. Oh, go ahead. I heard somebody start the question.
Hello?
Yes.
Hi.
Oh, can you hear me?
Yes, we can.
I noticed that building is right by the pool, and there are two other buildings around that pool. So during the construction, the construction activity will affect the tenants on those areas? I mean, the pool itself won't be as attractive, right? Because there's a lot of construction activities there.
I can answer that question for you. That was
Mm.
our first and greatest concern is, oh no, one of the primary amenities here, particularly how hot and humid it gets in Atlanta in Charlotte this time of year, is what are we going to do about the pool? Fortunately, the damage is at the side facing the parking lot that you can visibly see rather than at the pool area itself. It was just the luck that we had. The building will have to be cordoned off. It probably is by now because they're moving very quickly on security here. But the fact is the building itself, to folks using the pool, for our residents that are using the amenities there, the fitness and such around the building, they will not be impacted.
Carlin,
Yes.
this is Rod.
Hey, Rod.
How are you?
I'm great.
Great. Yeah, I just wondered, how do we ensure the tenants keep their renter's insurance throughout our contract with them? How do we check that out so we know they didn't drop it? Because if someone would have dropped it, like the renter, we would be hurting a little bit.
Correct. Brandon Felis in our office, in a new position formed last year, is our compliance and risk manager. Brandon is working daily with all of our properties, and one of the key things that he is watching and ensuring that the management companies are watching is renters insurance. We have going in, we have 100% compliance. And Rod, I do understand that the question here that, how do we ensure that they stay on it? How about if I follow up with Brandon on exactly what happens during, that year life when the policy is in place, and we'll get back to you with an answer that's tight and concise. How's that?
Okay, great. Also, I want to know, do we know if all the displaced tenants had renter's insurance, or do we have to pick up some type of tab for losses or finding a new place to live?
No, we don't. So with renters insurance, it covers the loss, of course, of the building and the loss to us. And if the renters themselves lose things, then they have to go to their own insurance company to see what they get for any kind of reimbursement. Now you can see from, Dave showing you some of those terrible pictures, there were residents in units that had total losses, but that is not the property or the investor's responsibility. It is the residents themselves have to go to their insurance company for their own direct losses.
Okay.
Mhm.
And everybody, there's no injuries, but everybody was able to find, I assume, a place to go fairly quickly.
Yes, there were this building, just the luck of the draw. This building was 100% occupied. All 30 units were occupied. We had several of those residents who actually were moving towards evictions because they had very high balances on their ledgers. And of course, they wanted to move to other units at the property, but we of course declined them because they would not qualify at this point. Residents who want to stay at Whitehall, they go through a process where they have to be requalified. And if they qualified, and if we have an open unit, we are more than open arms that we would like to keep them with at our building itself. Yes. I don't know the exact numbers of how many we were able to retain, but the occupancy, the physical occupancy at Whitehall today is 93%. So I think that we've got good occupancy today. I think good quality tenants who can re-qualify are welcome with open arms.
Okay. So another question on the Restore Pro, is that the general contractor that's going to be rebuilding the building?
No, Restore Pros, that company, it just like their name says, that particular company, they go and they clear everything out. They do a lot of the demolition, but as far as I am aware today, we have not picked a contractor or had it bid entirely yet.
So they already built 200K. So do they have the building pretty much stripped out now in 3 weeks?
No, no. I mean, the 300K is going to be part of the clearing out, but part of this creating security, putting up the fences, things like that. But I would anticipate that the full demo will be significantly higher than that.
Okay, so then the 150 or 1.5 million
Mm-hmm.
to build has nothing, does not include the demo. That's just rebuilding the property.
No, it's all inclusive. That would be the full insurance claim is estimated about at 1.5 million. Now, these insurance claims, as those of you that have ever had any catastrophic thing happen to your home or any other building, these claims can grow. And so right now we think it's $1.5 million. It could end up being, $1.7 million. We don't know. All we do know is that we're fully covered. Time is not our friend here, particularly if our loss of rents are 18 months. So we are moving on this as rapidly as we can. One of the good situations with today versus say 18 months ago is that the supply chains are better. They're not perfect, but they are certainly better than they were a year and a half ago. So that will help us to get this building rebuilt as quickly as possible.
So out of the 30 units that were damaged, there were what, 9 people that I guess their apartments weren't damaged badly, maybe smoke. But are they all going to be stripped out and redone, or remodeled?
So what happens? Yeah, what happens with a building like this, because you can see that a big portion of the roof is missing. The building itself, the entire building, most probably is going to require occupancy permits for the entire building. In other words, that we will not be able to get occupancy permits for say 7 or 8 or 9. So we are very early in the process. That could possibly change, but it's most likely that the building will be cleared out until we can get occupancy permits for the full 30.
Okay. Okay, thank you.
Oh, thank you.
How can we ensure the contractor will complete it within 18 months?
There is no guarantee, although there is a high probability and a high commitment to get it done within 1 year. Delays that we have seen since the pandemic started and the supply chain issues, it could be that we have units completed and we can't get refrigerators. I mean, so there literally is no guarantee. On the other hand, what we are finding from practical experience in the recent months is that getting materials, getting appliances, getting those things is certainly more timely than it was in the last 12 to 18 months. We're confident this can happen. If there are glitches, we will absolutely keep you guys up to speed on what is going on.
Actually, this fire thing happened to another apartment building in one of the properties I invested in.
Uh-huh.
So what I remember what I heard is the insurance company will pay you this much, but actual cost may be less than that. So, but I don't know in this case will be exactly how much they will cover exact amount we use, or they estimate a certain amount. If we don't use so much, then there will be a little bit saving there.
I really can't speak to that. I know that when we submit invoices to the lender pays those invoices. So it's not that they're saying we'll pay you $1.5 million, and if it costs less, keep the difference. It's pretty much that here's the invoices, they've been approved, they pay, and we move on. So I would not count on us getting excess proceeds, at least right now.
Carlin, did this affect any of the other tenants in the other adjacent buildings? Did we lose any tenants because of the fire that you know of?
As of today, no.
Okay.
Yeah.
Possibly with construction going on and the activity, we might have a slight loss.
Correct. What happens at times like this, if there is a lot of negative activity because of construction, which again, we don't anticipate, but it can happen, that at renewals, it's typical for us to increase rent at renewals. That's what we do, right? So maybe we flatline the rents for adjacent units to ensure that we don't lose occupancy. That's a strategy. If we end up with more vacancy near the fire building, even for new leases, we may not bring those leases to market. It really is a decision made with our asset managers and the on-site on a case-by-case basis as we work through the next 12 months, 12, 18 months.
Okay, and who interviews the contractors? Who picks the contractor?
We do at IMG. Neil and Michelle both have extensive knowledge, Neil in particular, with these kind of catastrophic events. Michelle has been working in this market for years now with us, and she knows many contractors, she knows many subs, and it'll become a competitive process in the bidding, but we're also looking for quality. So that is the process that will go on. It's exactly what we did up in Seattle. We had a claim. Yeah. Yes. Can you repeat that, please? Hello? Dave,
we didn't quite hear that question. No, that
Okay.
might be one that you can type into the chat box and you can answer it through the chat.
Okay.
I have a question regarding the wall to facing the pool. Would it be just a temporary wall and then just very, I mean, personally, I don't like a vinyl wall that is, for the construction. So it's not very pleasant. If that's the case, can we make it something nicer, or putting up a painting there? Picasso painting something, or a jumping house for the kids, or something that doesn't feel like that's the empty side.
Right.
Mm-hmm.
And we completely understand the comment. The amenity set is crucial for keeping the rents where we want them and increasing the rents. Anne Passan, she's one of our senior asset managers. She has been recently, she has been in that market, and she's coming back with some recommendations for us.
But that's a right question, Chelsea, about how do we maximize the aesthetic and maintain a really nice leasing environment.
Beautify it. Okay, this is my experience, because when I travel in Spain, there I saw some construction site, but they make a fake wall with actually looking like the building itself. They painted it, and then with the very interesting figures on top or something. It's a very pleasant to look at. And in Taiwan, I saw the construction site make a wall with lots of plants, wall plants. There are lots of them. So whole wall is just green, actually real plants. that looks nice. I'm just thinking about ways that people, when they're relaxed at the pool side, they don't feel that side is just so ugly, you know.
Yeah. Thank you, Chelsea, for those comments, and we will completely keep those in mind as we go through this process. Remember, we are spending money where it needs to be spent. We want to raise the rents on these new and improved units, and we don't want to spend dollars that we are not going to get reimbursed for. So we will be looking at that as we understand the complete scope of this project as we move forward. One last thing I want to be able to do real quickly is have Dave, just for a minute or two, talk about where the rents are today, where we anticipate they're going to be after the construction is done, and what that means for value. So Dave, could you do that real quick? Because I think it's important.
Yeah, I'll address that, and I'll also wrap in a question that came from another owner about the timing for the sale. So I think those two line up well. Well, our average rent now for the occupied units is about $13.75, and for the remodels that we've been doing, we're getting about $100 premium, so up to about $14.75. But keep in mind that a lot of the remodels that we're doing are pretty value driven, right? So we're doing maybe appliances or lighting and plumbing and flooring, and so they wouldn't be considered a full scale remodel or a medium or heavy duty renovation. So what we have projected, and this is kind of back of the napkin, just projecting out to the future, but with these units being fully rebuilt, being brand new inside, on a really conservative basis, we could expect about $150 premium for those new units versus what we've got today. And if you annualize that and put it on a 5 cap value, that's value to the building of about $1.1 million or more that we weren't expecting without the fire. So that goes back to the silver lining, some of the silver lining that Carlin mentioned. A year from now or 18 months from now, when everything is done and those units are leased again, if we were to re-underwrite the building, we could have another $1 million that we didn't have before. So that's a great point, and I think that plays into some of our longer term outlook. And then the question that came from Stacy about what happens when we move away from the interest only piece of this loan. With this loan, our interest only period and our prepay, our expensive prepay fee, they both expire in January 2026. So we've got a 3-year period for interest only and a 3-year period where we pay yield maintenance. Our thinking now is that we would prepare and we'd start talking about this sometime in 2025. But if everything proceeded as we had anticipated, we'd start talking about a sale to occur early in 2026, so that we're not further into the amortizing piece of the loan, and we capture the value and we can exchange and move away from Whitehall. So looking at it as about another two and a half year hold. Well, Carlin, that's my piece on the rents and the value. Anything else you want to cover before we close?
Hey, Dave.
No. Oh, go ahead.
So on the rental, will the rental market support $1,625 on the new remodeled units in a year? It's quite a ways up from $1,375. But did you follow me on that, or did I miss it?
Yeah, and no, you're right. And Rod, the reason why I think it does is we're getting $100 premium with the remodel right now. So if our average unit is $1,350, $1,375, we're getting $1,450 or $1,475 for the same unit. So it's assumed that we could get another $50 premium for a fully top to bottom renovated unit. I think that's on the conservative side, but just wanted to kind of start there as a talking point.
Okay.
Well, I think we'll go ahead and wrap this call. We really appreciate all of your time today. And please reach out to Dave or myself if you have any additional questions or concerns. This is a call that is very, very early in the process. And so some of the questions that you have, we have not been able to answer simply because we are so early in the game here. But we have found from catastrophic events with other properties in the past that the sooner we talk with you, the better off we are. So with that, I want to thank you for joining us today. Dave, thank you for also assisting with this call, and Natalie behind the scenes on the tech. And let's keep on moving with growing Whitehall in the future. So thank you.
Thank you.
Thanks, everybody.